Over the last 7 years, trading has brought me in more than $4 million, and today it earns me around $100,000 every single month. In the next couple of minutes, I'm going to condense my years of experience into a simple 3-step guide on how I would earn my first $10,000 a month starting from zero. And the truth is, my own journey started from exactly that point. Zero. I wasn't born to wealth, and I didn't start with a fancy trading desk or a mentor guiding me through. Back in high school, when I started trading, I was working a regular job at Walgreens. I spent my days stocking shelves and balancing homework, while my nights were consumed with the mission to understand the markets. At that time, I didn't realize it, but that job would become the foundation of my success. It wasn't just a paycheck. It was my first step towards building a future in trading, and I saved up what I could, invested in my education, and build a small safety net so I wouldn't have to rely on trades to get by. Having a steady job gave me that financial stability to think long term. I wasn't in a rush to gamble with my trades. I was just learning. I wasn't just trying to make quick money. Instead, I focused on building small, consistent gains, knowing that every trade was a lesson and every loss was an opportunity to grow. Without that steady paycheck, I might have been tempted to make reckless decisions, but instead, I stayed calm, kept learning, and slowly built up my skills. First, if I had to start from zero again today, I would do it the exact same way I already did and get a job. I would personally look into something like DoorDash or a similar gig-based app. These jobs are perfect for quickly getting cash flow without locking you into a rigid schedule. The flexibility will allow me to work as much as I could in my free time while also keeping my schedule open for studying the markets and trading, which is key during this time. This could mean taking online courses, reading books about trading, or experimenting with paper trading accounts to get a real feel for executing trades without the risk of real money. I would start by mastering the basics of trading, understand the different types of markets, learning how to read charts, and testing my knowledge through simulations. Additionally, having a job in the beginning is a perfect way to test your discipline and work ethic. Trading requires a high level commitment, focus, and the ability to keep emotions in check. Now, a job teaches you how to work independently, manage your time, and stay organized. Skills that are directly transferable to trading. Being able to handle the ups and downs of a job will help you manage the emotional roller coaster of trading and keeping you steady and focused during both gains and losses. After saving every bit of income that I can from those deliveries and studying the markets and learning a strategy in my free time, I would begin the next step. I would start small. Maintaining your financial foundation is just as crucial as building it in the first place. Once you have a steady income coming in, whether it's from a part-time job like DoorDash or any other gig, the next step is to be disciplined with it. It's easy to get caught up in the excitement of trading, especially when you see others making these big profits. But the truth is, your financial foundation isn't something you want to play around with. It's all too easy to fall into the trap of thinking that you could afford to take bigger risks just because you made a little progress. When you start trading, it's important to remember that small, consistent gains will always outpace these big, volatile swings. There's a reason why professionals spend years perfecting their strategies and learning how to manage risk. You don't want to go all in on your first few trades and end up losing a significant chunk of that cushion you've worked so hard to build. Trading small at first allows you to learn the ropes, develop your strategies, and avoid making stupid mistakes that could cost you everything. You're not only limiting your risk, but you're also giving yourself the chance to learn from every single trade without the pressure of losing big. If I were to start, I would start out with $500. I would approach it with a strong emphasis on risk management and discipline. The first thing I would do is treat that $500 as a learning tool, not as a source of income. It's easy to fall into the mindset of thinking that $500 is a small amount, so you could afford to take bigger risks. But that's exactly the mindset you want to avoid. With just $500, every dollar counts, and it's important to be very strategic on how you allocate that capital. I'd start by focusing on a few high probability setups, not trying to hit home runs with risky trades. For instance, I concentrate on small, consistent gains from short-term trades or swing trades where I can control risk. I wouldn't be chasing these quick profits or relying on the hope that a big trade will come along to make up for the losses. Instead, my goal would be to build a track record of steady, positive returns, even if those returns are only a few dollars at a time. Every win, no matter how small, would build my confidence and solidify my trading plan. Another key to starting with $500 would be to prioritize learning and improving with each trade. I check my trades meticulously, reviewing what went well and where I could have made better decisions. This is where the real learning happens, and it's not about the money in the beginning. It's about refining your process and gaining gaining experience. You're learning how to spot good opportunities, how to execute trades efficiently, and how to deal with the emotions that come with trading, especially losses. And by now, you should have a proven, consistent track record of profitable trades. You're no longer gambling. You've got a strategy that works, and you're consistently executing it with discipline. Keep your focus on this consistency, and remember that small wins add up over time. Now that you have some confidence in your risk management strategies in place, you can begin into the final step. Scale up your position size. Start with small increases, perhaps moving it from 500 to 1,000, then 2,000, as you see steady profits and feel more comfortable with your strategies. Scaling too quickly can be dangerous, so it's important to only increase your position size as your experience and account size grow. The key is to increase your risk gradually, ensuring that you're comfortable with every new size before moving on to the larger position. Scaling your account is an exciting milestone, but it comes with new challenges. With larger position size, the emotional stakes get higher. More money on the line can stir up fear or greed, especially if you're not mentally prepared for it. To manage this, always scale incrementally and never be tempted to increase too much too quickly. This will allow you to stay grounded, develop greater emotional control, and learn how to handle the stress that comes with trading larger amounts. At this stage, emotional control becomes even more important. The temptation to take larger, riskier trades grows as your account balance grows, but the key is to stay disciplined. Stick to your trading plan and remember that consistent, steady growth is far more valuable than gambling for big, immediate returns. Focus on executing your strategy rather than chasing these large profits. Keep your emotions in check by following your risk management rules and ensuring you only take trades that meet your criteria. The more emotionally detached you can remain, better you'll be able to handle both wins and losses. As you build your account, consider reinvesting a portion of your profits back into your trading account. This creates a snowball effect that will allow you to scale up your trading without needing to deposit more money from outside sources. As you trade larger positions, your profits can grow exponentially. Once you're consistently earning 3 to 5K a month, set specific measurable goals to reach that 10K a month milestone. Breaking down these goals into actionable steps can help you stay focused on the long-term objective and avoid falling into the trap of chasing these bigger profits too soon. This might involve refining your trading strategy, diversifying your trades, or increasing your business size slowly as your account grows. The key to scaling up is consistency and patience, so keep the focus on gradual improvements. If your goal is to transition into a full-time trader, this is the point where you need to assess your readiness. Do you have the capital and manage potential drawdowns? Can your strategy generate consistent returns? Are you emotionally ready to handle the ups and downs of trading full-time? If the answer is yes, you might be ready to take the leap into full-time trading. Thank you for watching.